My camera was on. How's everybody doing? Let's do a sound check. It's not started yet. Let's go ahead and let's hit that intro, and then we'll get it started. How about that? Give me just 1 second. We'll hit the intro, and then we get started. There we go. Welcome, everybody. Welcome to Slow Markets. We already did the sound and visual check. How's everybody doing? Just a great way to start a Sunday. It's a great day. Great day to be resting, relaxing, spending time with family. And, yeah, who needs to be thinking about the markets anyway, right? Great weekend. Has anybody traded yet? Who's traded? Way down already? That's not a good way to start. Yes, long. Okay, there's a lot of people trading. A lot of people trading already. Probably a lot of traders who wish they have not traded, right? I'm sure that is part of the case. So give me a minute. I'm just getting a few things set up. Yeah, this is going to be an interesting week. We all know what's going on. Nick for a Tick covered it. He talked about it. If you guys missed it, he's just before me on TopstepTV. Nick for a Tick, great on Sundays. We have elections. It's going to be a busy week to say the least. And yeah, we're going to see what these elections will bring to these markets. As always, I will say this. I'm not going to be stating any of my biases when it comes to elections, staying out of the political opinions, but we do love volatility, and we're going to see, most likely we'll see a lot of that coming until Tuesday night. I'm going to be here with everybody Tuesday night. I'm not going to be trading it. If anything, maybe we just play around in a demo account when it comes, but we'll watch the markets Tuesday night. I'm going to stay away from any opinions or how my views are on politics. I'm purely going to be talking about the markets. I'm going to be talking about, how I trade the markets, how I navigate around such an event like a presidential election, and how they're going to be affecting the markets is anybody's guess when it comes to the reaction, right? If everybody knew exactly what's going to be happening, then it wouldn't be much of a market to be trading and not as volatile. So that being said, here we are. Let's go through our regular rapid fire. It is Sunday night. It's a shortened class tonight, but here's the NASDAQ. Let's take a look at the NASDAQ daily. I do see a great opportunity maybe that can be setting up. This was the 30th. We had that major sell-off on Halloween. We did recover, quite a bit of that on Friday, and here we are Sunday night, the Monday's trading session, and I missed this signal, but I could understand where some of the traders in the chat was looking at. Take a look at this. This is something I'm watching going into tonight. Is this a bullish market? And that's what I want to talk about. Is I definitely can see us. Are we going to rally? Are we going to rally here where we're holding these higher lows? We came down to this area of resistance, and we broke through that on Friday, came back. We tested it not once. We tested it again, after, basically tonight we've tested it, and we've rallied all the way. I mean, we went all the way down to, 20,070, and here we are. We're off to the races tonight. Watching even the past 1 hour, the past 35 minutes, we've been rallying really strong off this level. And if we zoom into a 5-minute chart, I mean, you could see it, right? There's the gap down, immediately filled it. And now we just filled it, right? We just filled it. So we didn't immediately fill the gap, but we immediately bounced off of that level, consolidated this. You guys are going to see this as a pattern, a beautiful looking pattern. And yeah, rallying really hard off of that. And the next question is, where do we go? I, of course, missed my opportunity to trade this because the market has already moved. But yeah, on the hourly chart, 3-bar reversal, right? This is a nice reversal candle. We got the 3-bar reversal. This is a bullish market as of right now. Now, it is the Asian session. We do have the elections coming up. Anything can happen. And while we're on that, what's everybody's idea here and how they trade let's say, going into the presidential election? Like, do you guys change the way you trade? I'm curious. Have you traded it? Do you change the way you trade? I don't like to trade it. I prefer not trading, comparing that to actually trading it. It's always safer to just watch it and then come back after the thing's settled, because to be honest, trading is just as much more about not losing money than it is to make money as well. First time trading, yeah, if this is your first time, it's probably best to sit it out. And if you have a demo account, maybe just play around in that and you guys could see how it is. The spreads are going to be crazy, and I could only imagine that every new breaking news when it comes to who's winning, every different state that's changing from one vote to another, the market's going to be absolutely crazy. Greg. Yeah, and here's the thing is, it's not only going to affect Tuesday, it's going to affect what we're seeing in the markets now. So I could almost guarantee you that the markets are watching, and they're watching what's going on now. They're watching, tomorrow during the New York session, there's going to be an effect in the market. And then, of course, Tuesday on election day, it's still going to be having an effect on the market. And then even into the following day, Wednesday, there's going to be an effect on the market because of the elections. And I would dare to say, like, maybe even Thursday, Friday, the market could start to be a little bit more stable. But there's going to be volatility. And when volatility comes, that's where we love it. It is also daylight savings. We did fall back an hour. I'm here in Utah, and the team in Chicago, where typically right now it usually is 8:30 p.m. Central. It's now 7:30, right? So we did lose an hour. Not every country and not every state does change, but that's something that I got to sleep in. And it felt good for me. It is a bank holiday in Japan. It's a bank holiday in Japan. Daylight savings. This is coming in tonight. You guys know. And then November 5th, it's the big one. It's the presidential. It's the presidential elections. And then the funny thing is, immediately after that, we do have. It's kind of quiet until Thursday. We have FOMC minutes. We have a press conference. We have Thursday's gonna be a big one. It's FOMC. I didn't realize that it's usually on Wednesdays, but because of the elections, I think they're pushing it to Thursdays. Right? Is that correct? Let me know. I think that's the reason why. I'm just going through reading, going into some more details. Yeah, it's going to be very volatile, to say the least. At least that's what we can hope for. Hope for. Correct? It is volatility. Now, that being said, do I want to trade tonight? Yeah, of course. I think tonight is a green light for me to be trading. Tuesday is going to be the election. Today's Sunday night. And however, it's just understanding what's going on this week. I like the bulls. I'm bullish. I do like that we're holding these higher lows. However, any moment we could sell off and break through this. But until then, I'm a bull. I'm always looking to be buying the dip. I'm seeing these massive these massive sell-offs as buying opportunities. It's buy the dip until the market tells us otherwise. If we start to break through, then obviously it's going to be hands off looking for some lower levels. But until then, we are holding nicely. Friday was nice tonight. So far, so good. Maybe we could come back up here and test Friday's highs. I'd like to see that. Are we going to see this during the London session? Maybe. Hopefully it waits for us. And maybe we start to see chop and then, come tomorrow morning. I'm going to be on TopstepTV during the day show during fast markets, myself and Nick for a tick, I believe. And so, yeah, I want the market to come up to see these 250s. I think it really does have a chance to rally up here. I'd like this to happen during fast markets, not while I'm sleeping, because I think the trade setup I've already missed out. It would have been, looking for a long down here at this level of support right at the open, and you can zoom into a 5-minute chart. And maybe there was an opportunity. You guys hear me talk about the 5-minute 3-bar reversal. So maybe there was some type of opportunity around here. Maybe there was an opportunity to buy a break of this bullish flag. So I think the opportunities so far tonight has already played themselves out. I'm not seeing anything too exciting on the NASDAQ. Now, let's move on. Let's move on to crude oil. We'll go through our regular rapid fire, and then I'll get to some questions. Well, man, what? This is crude. I mean, look at this, right? Massive gap down 1 week. Pretty decent sized gap to the long side this week. What do we think of this? I don't know. Maybe is this one where we just I say I'm hands off crude? Can we fill this gap? This could be one where I just say, you know what? Pass. Because we could fill this, right? We could fill this gap. That's definite. This is an hourly chart on crude. Let's take a look at the daily. Daily here is there's a lot of chop going on around this $70 a barrel level. 5-minute, not really much. I mean, you see this gap, and we know how gaps love to be filled. I mean, I say that, but last week's is still not filled, right? Last week we still have a bit to go. But I don't know. Do we fill this gap and then fill that gap up here? Or do we fill that gap up here, then fill this one? Or do we not fill one of these gaps? I'm not sure. This is a rough one where I think it's better for me to just pass on crude oil until we start to settle down. I know there's a lot of political headlines. There's a lot of, world headlines that affect crude. And obviously, you guys seen that the other day where crude just jumped up over $1 in less than 30 seconds. So I think it can be okay to just say, you know what? I'm not going to be trading crude, or the way that crude is acting right now, I'm not going to trade it. So because, I'm going to go take a look at gold. Let's take a look at gold. Gold, if you guys remember on Friday was a great trading day. Myself and Mohammed, that was really fun. We was reading the markets good. The markets were really good to us. I was looking for a short on gold. We had that major sell-off, and then we got this pullback. And, to be honest, that pullback kind of does look like a Fibonacci level. It probably looks like a third, just over a third. Probably is, right? Depending on how one would draw their Fibonacci, maybe from here to here. Yeah, so that's half from there, but then from here it's over a third. So whatever, it's probably a Fibonacci's level to somebody somewhere, depending on how you draw it. But anyway, and from a pure technical standpoint, it's a pullback, right? It's a pullback, and then we got that pullback, and during Friday's session, I was looking for a reversal. We sold off. This was trying to act as support again. We broke through that. We came down. We test these lows around 27.40, 27.40, what was that, 39? And I'm not as bullish as I was on gold. Of course, I don't want to be a seller, because if we look at the daily charts, if we look at this daily chart, these pullbacks have been really great buying opportunities. So I think this could just be one of those where maybe we do have a pullback. And talking about election, I'm going to be talking about the election a lot because it's going to be affecting these markets. And then, of course, FOMC is going to be just as big when it comes to the volatility in this market. And so, maybe we get consolidation tonight. Maybe we get consolidation going into the election. So I'm not expecting too much, and I'm okay since we've already pulled back. We've pulled back quite a bit. Can we pull back more? Sure. If we're going to do some type of a measured move, I don't know. Wow, that's interesting. From there to there is pretty dang close from that, right? So maybe we see something similar, right? There's the first pullback in 2 days. And if we measure what we just did, that's 2 days. So maybe we get some type of, move up and then a continuation down. I'm not sure. Like I said, it's anybody's guess, especially going into how crazy this week's going to be. I'm not expecting all-time highs, and I wouldn't expect this. I'm just saying I'm not as bullish on gold. I'm more of neutral to actually even a little bit of bearish. So I would be okay with being neutral to bearish on gold, just as we sit, looking for maybe a deeper pullback or sideways consolidation. And then the Nikkei, Japanese market, and I think it's a bank holiday. Did I say it was a bank holiday today? Yeah, it is a bank holiday. I'm pretty bullish, very similar to the NASDAQ, where, this is a daily chart. Take a look at this. Last week, we had that beautiful setup. We had a sell-off, a pullback, consolidation. We rallied up. And now we pulled back. This is still holding. Buyers are still buying the dip. And so maybe we look for some consolidation here. And if we do break above, make a 3-bar reversal on the daily chart, we could see a continuation back up towards these highs. Still like to see Nikkei at 40,000. If we zoom into an hourly chart, we could maybe see more of the same. Hourly charts, very similar to the NASDAQ, right? Where, this is an interesting zone. A lot of buyers have been stepping in here. Higher low, maybe we're forming a higher low. We zoom in even further, looking at the hourly. Maybe we're looking at something like this. This could be a possibility where we have the breakout, a pullback, and then maybe we see some type of a continuation. But seeing some bullish market structure stepping into the market, which is a great thing to see. Let's take a look at the NASDAQ again. Yeah, NASDAQ's pushing up. NASDAQ is, we're pushing. Is Nikkei following along? Nikkei's not following along at all. Nikkei gapped down quite a bit. That's Nikkei still can fill this gap, to be honest. If we get a pullback on Nikkei, I might end up buying. I might get into a long on the Nikkei if we pull back to like 420s. So I'm going to watch this. And let's keep looking. So I'm going to always be watching on one of these markets. I'm kind of late to the party here on the NASDAQ because it hasn't really given a decent long opportunity, but we're pushing. This is interesting. Better late than never. That's fair. But now 4.4 times 1 lots. Whole Europe for Trump. Yeah, I'm not going to be giving my political opinion. You guys know I live in Utah. That should be enough information for everybody here, right? Let's get to some questions now. Let's get to some good questions. All right. Any questions going into this week? Any questions for me? Any questions for this market? Like I said, I'm going to say this over and over again, and I'm going to be talking about it. You're going to hear it. It's going to be blasted to everybody because it does affect the markets. It does bring volatility. We have elections coming up on Tuesday and then an FOMC Thursday. So a very busy week for the markets and the traders. Did I trade last elections? No. Nope. I watched them. I did not trade them. I had open positions throughout just because I trade options and I have longer term positions. What I like to do is I like to have a higher percentage of cash in my portfolio going into the elections, and then after the elections, I put that cash to work. I like to sell premium. I like high volatile times, and this is going to be one of my favorite weeks, to be honest. Is all this volatility brings opportunity. So after the elections, after FOMC, probably Thursday afternoon, Friday morning is where I'll start to put a lot more of my cash to work. The only goal this week should be not to lose an account. That is honestly a good goal, which I'm sure there's a lot of traders out there that would be happy with that goal. It is to trade smaller. That's probably one of the best advice that I could give sometimes, right? Is, instead of trading minis, you could trade micros. Trade micros if you are going to be trading. Is trading off limits for Tuesday's entire session? Should be Tuesday night for live accounts. I did get an email from Topstep saying Tuesday night for live accounts should be off limits. Tune in to TopstepTV. They also have details. We're going to be talking about it. We'll talk about it in the morning. Probably going to be talking about it Tuesday morning as well. You need nanos, not micros. I mean, $2 a point in the NASDAQ. We're seeing volatility tonight. Let's see. This is quite the move, right? We gapped down 100 points, and we've rallied over 120 points since then. Do you do longer time options? Lee, yes. One of my favorite things, and one day I'll be able to do maybe a few sessions or a few classes talking about options, but I'm an options guy. That is where I thrive. I love it because it's one where I don't have to watch it every day. But then trading, doing the same thing. Everything that I do in front of you guys and girls is the exact same thing, or at least relatively close to how I read the markets in options. It's very similar. Yeah, options is a completely different world. The VIP is going to be coming soon. Ooh, good shout out. Talking about the VIP, you guys seen it on, I think Topstep even sent a tweet about it, or a post. A tweet, a post. What is it? But take a look at this. Let me pull it up. There we go. Look, here it is. Let me see if I could zoom in on here. So, yeah, exclusive Q&A. This is not the VIP. This is going to be a group coaching. Topstep is calling it Topstep Labs. I love that. That's a great name. It's a 2-hour Q&A session Wednesday, November 13th at 5 p.m. Central Time. Tune in this week. So you guys are at the right place here. Slow markets this week. Check in for a spot to win 20. It's going to be a great thing. This is completely different than the VIP session. VIP is going to be for 50 traders. Like I said, continue to watch. We'll get more details on that one, but this is a good one. I like that. Stay tuned. And you guys know I've been a lot more active on social media, having fun. I've been having fun, to say the least. But I don't pick. Okay, it's not up to me to pick. I don't think it would be fair, and all that fun stuff. It's gonna be random, but I will just say the more you tune in, the better it is. Hot Dog Dakota is fun. We just want to forget about that one. only on only on Halloween is you guys get hot dog Dakota. Man, I've seen a lot of memes on that already. Yeah, I have no comment. You guys get to see that. I have a clip that I might post of it, which was pretty funny. I went back and watched some of it. Some of the team members were watching it. There, you might see a couple hot dog clips. Benjamin, that was your first time tuning in. Man, I'm sorry for that one. If that was your first time to slow markets, that was one heck of a impression. Then it is recorded. Okay, it is recorded, so you guys, it's all out there. Everything on YouTube is recorded. That's the beautiful thing that I absolutely love. Everything I do in front of you guys in my live account in Combines, it's all recorded. It's all there. It's fun. Yeah, I'm watching. Look at this. Nikkei, beautiful bounce up. And once again, this has been the theme of my month. Markets are just going without me. It's been a theme. It's I don't know. I think there's a fun joke in there somewhere. No trade November. There's definitely a funny joke in there where the markets are going without me. It's been the theme actually the last feels like month. And I'm not seeing too much. 8 p.m. Right at 8 p.m. we've been seeing a spike, or it's not a spike, a move in volatility here in gold. So maybe we could watch gold. No money November. Feels like that. I've been up and down the Nikkei all night long. It's moved really nice tonight. Yeah, so far so good over here looking at the Nikkei. I'm watching gold for a moment. We'll see if we're going to see a spike in volatility here in gold. But let's get to some of these questions. Now we have a lot more coming in. Okay, let's get to them. What options do you trade? Futures options or stock options? I like to trade like QQQ. I like stock options. I've played around a little bit on futures options. So a little bit of everything. But I would say my, quote, bread and butter would be options on like the Qs. For example. Yeah. Something that's not too crazy. Not zero day to expirations. Why do you trade ticks instead of a minute charts? Ooh, good question. I've covered this, and I will never get upset for traders who ask me questions. Okay, even if it's the same questions very frequently, right? But as long as it's new traders, if it's the same traders asking me the same questions, then it gets a little bit annoying. But yeah, I love answering questions, and this is one I get a lot, okay, is why do I use the 100 tick chart? Well, I don't in the slow markets. I very rarely look at the 100 tick chart in slow markets, right? Because the markets are just so slow. But during fast markets, the markets move so fast and there's so much going on. I do like to zoom into, say, the 100 tick chart so that way I could see. Lately, I've been calling it breadcrumbs. So my trade setup's on the 5-minute chart. Okay, so I'm looking at the 5-minute chart and I'm saying, oh, wow, great. Look at this. There's a nice, there's probably an example here. Okay, let's take a look at this. Let's just say there is some type of reversal down here. Okay, I'm looking at this and I'm saying, there's a buying opportunity around here somewhere. But if I zoom into a 100 tick chart, I could probably see that reversal pattern a lot more clean, right? And so when I zoom in, the same data, there's a lot more data. It's like Google Maps. You're zoomed all the way out. You could see like a country, you could see like a state, but then as you start to zoom in, you could see more of, for lack of a better word, breadcrumbs, right? And if we're doing this, you can kind of see that pattern form. It's not always works, right? But the patterns form on smaller time frames before they form on longer time frames. A 100 tick chart is not a time frame. It's just a smaller chart, I guess. You could see it. It's a more zoomed in chart. It's not a time frame, but you can kind of see how, I did not plan this, but you could see how that there was a little bit of a flagging pattern, a reversal pattern that did set up here. And the break of that could have been a really good trade. And, maybe you could even make an argument for consolidation breakout here, and then a retest and consolidation breakout here, looking for higher lows and then higher highs. So this is only a 100 tick chart. It's only my personal preference. More granular. Yeah, that's also that's a better word, right? Granular. And then we compare that to, say, the 5-minute chart, and it's a lot harder to see it. And then say we look at the 1-hour chart, and yeah, there's no way we're going to see this on the 1-hour chart unless we're watching it live. You could see more of the bigger 3-bar reversal, right? So that's why I always love using multiple time frames, like daily, hour, 5, and then the 100 tick, just so that way I have a good view of what's going on in the market. And then when I'm actually going to execute and place that trade during the New York session, it's usually on right here, 1 minute or the 100 tick chart. But during slow markets, the 100 tick chart is kind of like the 5-minute, because this is where I'm executing my trades, is on the 5-minute. And as I've been doing that, look at NASDAQ. The Nikkei's rallied. Gosh dang. I told you, I don't like missing trades. That's been the theory. And you guys, I'm not really joking. I'm really not. And some traders I've seen come on here say, like, man, you're complaining about missing a trade when you've already made so much money. And I tell you, it's not about making money. It's about following the process. And it just sucks missing trades sometimes. It didn't give me what I wanted. And I'm looking over at the Nikkei, right? It didn't give me what I wanted, which sometimes that sucks. I want, and I was waiting for market to give me these 420s. It did not give it to me. And instead, it just broke through, and it's rallying really hard. That is hard as a trader. It's the psychological part, right? Where you absolutely hate to see the markets go without you, because you are trying to be patient. You're trying to wait for the market to give you what you're looking for, which is, unfortunately, sometimes it does give it to you and you miss it. Those are the worst ones. But on a market like this, I'm happy. I'm not happy. Of course, we want to be in the market when it's rallying, but if it didn't set you up, then there's nothing to complain about, right? If you just jumped in here and said, bang, I just think it's going to go up, then I'm not following my process. My process would be waiting for a pullback, waiting like we seen on the 100 tick chart over here on the left. This is the NASDAQ, right? So just waiting for, remember what we were looking for on a smaller scale when we zoomed into the 100 tick chart. So I was looking for something like that. Maybe something that would say, okay, where I want to, here's a low. I want some type of a higher low. So something like that to set up here on the Nikkei. And so I just didn't get it. Maybe this was it. But yeah, it's spilt milk, right? It's too bad. Too bad, too sad. Let's keep watching. I don't really need to watch that anymore. We could switch this one to maybe gold while I answer some questions. And if you guys see anything else in the markets that is moving, just let me know. Yeah, there's always going to be more trades. Always. There are more trades. Yeah, missing moves is not fun, right? How to overcome the fear of leaving money on the table when in profit. You just have to same thing what I was just explaining is there's always going to be fear of leaving money on the table when you're closing your trade. Almost always, right? Because if the markets are volatile and they're moving, when you close your trade, you always think to the back of your head, am I leaving money on the table? Is this going to continue going in the direction that I was? And a lot of the times it is going to continue going in the direction, and you're going to wish that you didn't close your trade. You hear us on Topstep TV all the time, if only we had a runner. But that is trading. The fact is, you will leave money on the table. I mean, that's the reality, because you will never, well, I shouldn't say never, but there's no strategy that should ever expect to get the exact bottom and the exact top of every move. Like, that's just, unless you are trading billions of dollars and you're pushing the markets by yourself, you will not consistently get the very bottom of the move, and you will consistently not get the very top of the move, right? You need to be happy with, if this is something that you're trying to get, to just get a piece of it. Get little pieces of this in the direction, and that's all we need to do is base hits, base hits. Of course, we want to catch the entire move, but that's just unrealistic. And if you're stuck in this type of a situation where you feel like you need to do that, then you're going to be stuck there for a very long time. You really need to just continue to think, if this is the move I want to catch, let's just do this. This is the honest thing, is this is realistic. This is a chart pattern that I very realistically could have caught. And from a technical standpoint, it's fair to say that the rally going into the flagging pattern can possibly be the same size of going out. Okay. So even though you can technically say that, predictably, I can probably have caught that entire move. Okay. If I got in, most likely I would be getting in, say, right here. Let's just say as it breaks at 137, right? So I'll get in there. And then where am I going to take profit? Well, I want to take profit, let's say, at a reasonable area. Say this is some resistance right there. I'd be perfectly happy taking profit right in that zone, right around 20,180. So even though I'm saying, oh, well, sometimes the move going into the flagging pattern can be just as big as the move going out, or breaking through. However, I need to understand that I should be very, very happy with this type of a move, and maybe even with that level of a risk reward, right? So there's the reward, there's the risk, probably getting a 2-to-1 risk reward. That is an amazing trade. Heck, I would even be happy with even just filling that gap and saying, I'm happy right there, right? So a lot of people are not satisfied with that level of a trade. They want more. They want more. They want what everyone is posting on social media, and they're always looking for more. That's the greed when it comes to winning trades. And here's gold. Is gold going up? Is this going to be another night of slow markets while we watch gold rally? We'll watch it. We can even... I'm still not seeing any trades. Waited for the bullish flag forming and waited for the breakout. Yeah, base hits. If you focus on base hits, every once in a while you'll hit a bigger trade. Like, that is part of the game. Let's get this back up. I want to continue. We could watch the NASDAQ. I want to continue to pay attention to the NASDAQ because look at this. We are at a level. This is a nice level of support and resistance. Man, here's one thing. Muhammad is amazing at drawing charts, and he's amazing at doing these drawings. I need to get better at it. So this is an area of resistance. So maybe this is going to, pan out to be a bit of a sell-off here. I want to watch that. I'm curious to see if we get back down here towards the 178s, 180s here in the NASDAQ. I'm going to watch this. I have gold over here on the right, and I'll continue answering questions. And then I need to get a sponsor here with, I've stopped drinking energy drinks. I've been drinking this. This is the drink I was talking about, this sparkling ice. And it's been good. A lot more healthier. I know, we need to get some sponsors. Yeah, Mohammed's fun. Mohammed's really, really fun. The way he's able to draw that stuff on his charts was pretty amazing. Do you recommend a daily take profit to pass a combine? Eric Banks, I don't recommend a daily take profit. I don't recommend a per trade take profit. However, it could work for you. The only thing that I love to recommend is following your strategy, following your process, and not think about the dollar amounts. You know, if you follow your process and if you could do it consistently, then, you know, the dollar amounts will, you know, take care of themselves. I know there's a lot of cliches out there where it's, what is it? The cents will take care of themselves or whatever those are. But yeah, I'm a firm believer that no matter how you trade, if you continue to follow your process over profits, you don't need to be thinking about, oh, how long is it going to take me to pass, right? It's just a matter of scaling. Is it true you do not use level 2 data? Yeah, it's true. I don't. I like watching it. You can see I have it right there. Let's see. But do I use it? Nah, I don't make any trading decisions based off of it. I've really enjoyed watching it. I really do enjoy watching level 2 data. I feel like there definitely is information there that can help traders. It's just not the way that I personally trade. I've seen Rips absolutely have some amazing calls, and he reads the order book, right? He reads, the heat book map. And yeah, so some traders say level 2 data is without it, they feel like they're trading blind and you can't trade without it. Vice versa, you know. But am I good at it? No, I'm not that great at reading this. I have a very good understanding where I can see, and, you know, so if you see 100 lot come in right here, you're like, okay, wow, you know, something's going to happen. And I have a general idea and I know a lot of the basic concepts, but I do not trade based off of this. You know, it does give a lot of good information, like, okay, how much liquidity is this market, right? Are these ones and twos? Are there's like 10 or 20 contracts on there? How easy is it to get in, get out? What's the spread? Because the spread's very important for traders. You know, am I going to get into this at a market order? Am I going to get filled all the way up here? And it gives you very basic information, which is very helpful and good. As a trader, you should know and understand a lot of that. But, you know, it's not going to tell me, you know, what I'm seeing right here. Like, we've seen this. Like, this is resistance. And yeah, the market is now starting to sell off a little bit, right? And maybe we could sell off down to this. But when I look at this level 2 data, this isn't saying, oh, you know, there's a support that was here on November 1st. This was not telling me where my technical analysis is. But there's a lot of great data that you could get from it. Yeah, I don't know. There's some amazing traders that use level 2. So I do see its usefulness. I enjoy watching it though. It's fun to watch. I could tell you that. We're going to watch it during the election night. We'll bring up the level 2 data in election night, and we'll watch the DOM. It gets pretty crazy. You pull it up during like FOMC or a big news event, that you could see how crazy it is. How do I use it? I don't. I don't use it for my trading outside of what I just said. It gives me a good idea of how liquid the market is. It gives me a good idea of the depth of market, right? You could see there's a, you know, almost a 1 point spread. Sometimes it's 2 points. You kind of see how deep the books are, right? You can see there's, you know, single digits, right? And this market, okay? So now this is this is an example. This is why I would find it important. If we take a look at a 2-year note, look at that. Okay, so there's a whole new market, and that gives you a lot of information. There's not a lot of volatility in this market. You see how thick this order book is. It takes a lot for this particular market, the 2-year notes, to move one tick, right? There's a completely different contrast. And then we go ahead and we take a look at something like the Nikkei, right? Nikkei, really, really thin, 1s and 2s. It's even thinner than, look at this, and then there's gaps. And so this is very important information as a trader to just understand what type of a market that you are trading. And we could take a look at crude oil. Crude oil is a little bit thicker. It doesn't say it, but it doesn't give me my exact entries. And then we have the NASDAQ. It's all in the candles for you. Same. Interesting. Yeah, so that's it's fun. It's always fun to talk about these different stuffs. Let's take a look. Let's take a look at the note. I just still think that's just crazy. That is interesting. And yeah, Coach Jay said it best. It's very important for the live traders, right? Because you want to get your order filled. And what's the odds of you getting your filled, say, like here versus here versus here, the bid versus the current price versus the ask, and then comparing that to, say, like the Nikkei, am I going to be getting this price? Look at this. See, there's a spread. See that spread? That can be very important to know. If I go buy at market, I'm not getting this price. I'm getting the ask, right? And that's at $25 per tick. That's $75 difference, right? So if I click buy market, I could be filled and I could be $75 in the hole immediately. That is big, right? And that's on one contract. There's times where I'd get into 5 contracts. Could you imagine 10 contracts? You're getting filled 10 contracts. Well, there's only 6 right there. If I was to place a buy market 10 contracts right now on the Nikkei, I'm actually going to be getting filled at 590. So I'd be getting filled at minus like $500 immediately in the hole. If I put buy market 10 contracts, it's like instantly minus $500. Based off of, I mean, of course it's changing second by second, but yeah, that's understanding this, because if I'm going to trade this in my live account, and I'm saying I want to be buying this, and look, I did. When was that? I think it was last week sometime. I was long 9 contracts in my live account. Yeah, so I was long 9 contracts in my live account, and you could see it. Let's see. I don't know, wherever it was. So right here, and you could see it was a little bit tighter, but I had to build into this position. 9 contracts, my live account. So I ended up going a buy limit, buy it bid, and I had to build into this position using an order book, right? I'm not marketing 9 contracts because that's that's insane. I don't like market orders for that reason. So it's understanding, what market you're trading, how liquid the market is, and you're not getting surprised. That's why I do recommend trading one market. Get used to that market, understanding what's going on in the market. Like the NASDAQ, it's going to be very liquid. During the New York session, I don't have to worry about a 5-point spread trading the New York session in the NASDAQ when there's not a news event. So these little details. Now, I know for a new trader, it might not mean very much. Does this matter for very new traders who are still learning? Maybe not. Traders who've been here a while, they start to focus more on those little details. Does it change a lot whether you're successful? No. I could say it's the small stuff, yeah, and eventually it will add up. But overall, basic technical analysis, basic strategy process over profits is a lot more important than those little details, right? You'll learn about those little details as you run into them. It's always nice to know about it so it doesn't surprise you where you market into 10 contracts on the Nikkei and you're like, oh, wow, minus 500. What the heck? Something's wrong. There's a glitch. It's like, no, man, this is why. And then you have to learn the hard way. So there's going to be a lot of those little hard lessons that you learn in a very unfortunate way. That's just part of trading, right? Just like the only way I like to compare it to is that it's like a little kid, right? There's a little kid's running around and he puts his hand on a hot stove, and sometimes the only way to learn is by getting burnt, and that is how it is with trading. Yeah, trading in sim is different, correct. The nice thing is, though, that trading in a simulated environment, it's pretty dang close to live. It really is close. Like the way that everything works is as close as it gets, right? We are living in a day where technology and speed and execution is as close as it gets in terms of fills. I've been watching it. I've been testing it out. Trust me, I know. There's not as big of an advantage as one would think. But yeah, when you compare it to like the little details, of course, yeah, there's a difference. Slippage. Stop loss would have saved the NQ like now. Not sure what you mean on that one. Going through this. Yeah, let's get to some more of these questions. Like I said, it's a shortened class. What indicator would you say you put the most weight to? So, guys, I don't recommend any indicators because I don't trade indicators. So I don't have the confidence to say, oh, you need to use this indicator, because everyone can vouch for any indicator. The best advice I could have is, if you're new, if you're learning, and everyone's asking for indicators, use something simple. Use like a VWAP or a moving average and build a process around that. Keep it simple. I mean, heck, you seen Muhammad? If you guys missed Fast Markets on Friday, watch that. Like, that was a textbook example of simplicity and trading using, I think he has exponential moving average, EMA. And yeah, indicators don't work 100% of the time, but like that, he put on a pretty good, show on how to trade, and it worked really well. You rewatched it 3 times. Yeah. How do you change your trading slow markets versus the New York session? Time frames. It's just time frames. It's the same process. It's the same technical analysis. It's just, oh wow. There was a move right there on the NASDAQ. We just broke through 200, breaking through. I'm guessing Nikkei's doing the same. Is it? Yeah, Nikkei's moving as well. These markets buy the dip. Can you explain building a position? Are you DCAing? Building a position. How would I explain building a position, everybody? I wouldn't say it's DCAing. I would essentially say I'm looking for a pattern, and I get in as we develop that pattern. So you remember this pattern that I was just talking about earlier? So here is a 100 tick chart, and this is that pattern I was talking about earlier, right? If I'm looking to buy, and some, hey, I want to buy. I want to get in long down here in this zone, right? Based off of whatever technical analysis. I say I look to the left, and I said my technical analysis on this 5-minute chart says this is a good buying zone, right? So this is just an example. So I say this is a zone. I want to be a buyer on a higher time frame. I'll zoom into a 100 tick chart. This is purely an example. And yeah, I wouldn't say DCAing. Maybe scaling in is the best way I like to use that term. And so I'm like, I want to buy somewhere right here. And so what I like to do is maybe I get in one long contract right there based off at say 83 based off of a consolidation and a break. So say I get into one right there. Then I get into a second one right here at 91. Maybe we have another reversal. And then I get into another one, maybe on a pullback there. And then I get into another one when we finally break through this area of resistance at 108. So I'm okay with doing this, right? There's also examples where, I'm getting a little bit aggressive and I actually end up buying, say, right there, right? Say I'm like, okay, well, I'm going to just buy this, right? I'm just going to buy it just because this is at a great level. And then I'm going to start to get into it. There's many ways that you could scale into a trade. And I do the same thing to scale out of a trade as well, is using the same little details and the same technical analysis to get in as I do to get out. And man, look how nice and clean this market is. This has been a very clean market from the technical standpoint, right? Rally, pullback, rally, pullback. Like this is a pretty clean market tonight, which is really nice to see. Yeah, wow, this is sometimes slow markets is very clean and not as noisy, not as choppy as the New York session. We broke through, broke out. Yeah, everything's moving. So, all right, let's go ahead and finish it off. I'm going to go through and let's take a look and do a final roundabout on these markets. Crude oil still holding. Maybe this is going to be one of those markets now that we've consolidated and we do make a move higher, right? Because this looks like we might make at least maybe a run to the $70.80s. So this might be a higher low. Not sure. It's hard for me to take a long here with this big gap still just staring us right at the face. So that's going to be on my mind as the last one was. Whenever there's a big gap, everyone's watching it. Are we going to fill it? I don't know. It's hard to take a trade when there's a gap like that. Let's take a look. Nikkei, we see what Nikkei's doing. Dang, Nikkei is just doing exactly what we wanted it to do. What a move. I missed it. That was a great trade. I just happened to miss it. I was looking for 420s. That we were already 200 points, 200 higher than that. We were at 38. When I started, I was looking for 38,420s. We are now at 38,600s. Crude oil's rallying, and of course the NASDAQ continue breaking into the 200s, sitting at 218, and we might be getting here a lot sooner than I freaking wish. I was wanting it. I was hoping that we would be waiting until the New York session so Nick and I can take advantage of it, but market loves to move without us sometimes. Overnight session in London can have all the fun before we even open up on the New York session. So that's why I always say there's always opportunities in these markets. Look at this market, just go. Always opportunities. Love it. Last thing I have to say is, I'll be on fast markets. Stay tuned. Be tuning in. Slow markets. This week, during slow markets, there'll be the check-in form. It's going to be great. I'm excited to see it. Remember, it's elections this week, a very big week. Elections, FOMC, and, 9 times out of 10, the best thing to do is just not even trade. I would dare say, oh, wow, look, see? Oh, my gosh. Look, see that? There's that liquidity, like nothing on the order books. So you could see moves like that. Man. That's what I mean. See this order book? There's just when I say there's nothing is I'm used to watching this, and you can kind of see like it's just single digits, like even less, like 2s, 3s, 4s, 1s and 2s. Yeah, this market can move very fast, and so that's another piece of information you could get from level 2 data. Like, see how there's just nothing there. There's no orders to stabilize, and so marketing into this position, you just never know what price you're going to be getting filled at. So yeah, good example. Election night's going to be crazy. Stay safe. I will wait and look for everybody tomorrow morning. It's going to be a great start of a new week. As always, I am being a lot more active on social media, so feel free to follow, tune in. It's been fun. MP was chiming in on some of the stuff over over this weekend. I've really enjoyed it. I'm in there. I know Nick for a tick. Coach Jay, really starting to bring positivity into this industry. Jay's doing At the Buzzer. D's doing the London session. And what more can you ask for, right? Outside of regular trading hours in the New York session, Topstep, we're continuing to provide some amazing stuff. Like stuff I'm learning a lot. I enjoy watching it. I've learned a lot from Nick for a tick and Coach Jay during their sessions. I've learned a lot from like Rips. I need to be getting into the London session one of these days. Maybe one day where I just can't sleep, because I guarantee you D's just having a blast during the London session during these high volatile times. So until then, take care, and I will see everybody bright and early tomorrow morning, if not tomorrow night.